Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on my podcast, I have Christina from Vine Group. Christina is a trailblazer in the Canadian mortgage landscape, leveraging her deep expertise to shift the traditional paradigm as a certified Smith Manoeuvre professional. Christina doesn't merely facilitate transactions. She embodies the confluence of advanced mortgage strategies with the objective of wealth creation, enabling her clients to harness the full potential of real estate. Now, me personally, I'm excited to have Christina on because our firm works with Christina, and as I always say, there's brokers who are trying to fund a deal, there's brokers who are trying to build relations, and there's brokers who know what they're doing, and I think Christina's all three. So I'm excited for this podcast. Welcome to the podcast, Christina.
Amazing. Thank you, Harris. I appreciate that. That was a mouthful of an introduction, and I love it, encapsulating everything that we kind of stand and why we partner so well together, because you embody the same values of the clients, of what we like to do and what we try to deliver with our clients. So thank you for that.
No, I appreciate that. And but before I want to get into exactly how you guys are working, and before I jump the gun, at least, I'd like the listeners to kind of get a good understanding of how you got into the mortgage brokering world. Because frankly speaking, our firm, we get exposed to a lot of people coming in, and I think that you're like one of the best in the business, without a doubt. And I'm not just saying this, I genuinely mean it. So you can go through all of my past podcast episodes and you'll see that there's very few brokers I find that are really, really good at what they do. And I think you're one of them. And so how did you get into this kind of universe? Was it something that you're like, you know what, you always wanted to be a mortgage broker? Was it something that you kind of transitioned into? How did you get into kind of the world of brokering?
Yeah, great question. And I mean, honestly, it was, I think, a long path that helped me to kind of get where I am now. It started out in the banking industry way back when as a teller. It was 25 years, it was 25 years of experience within the banking world. So I'm dating myself a little bit here, but various different roles and stuff along the way, always trying new and different things, branch manager, small business advisor. And the last number of years of my banking career was as a dedicated mortgage specialist for a financial institution. And I always had that entrepreneurial spirit. So it was kind of at that point, I decided to make that decision to step out on my own and become an independent mortgage agent. That was 5 years ago now, actually, almost to the day. And I haven't looked back since. I absolutely, absolutely love the ability to have greater diversity of choice for my clients, to be able to not just be an order taker, but to truly be able to dive in and find solutions for them that isn't just a single product solution that I had available from the institution that I work for.
Yeah, I mean, that's why I always, whenever somebody asks my opinion, going to the bank or a broker, I love banks. We work with banks. I've got nothing wrong against banks, but at the bank, you've only got the bank's products. And so, like I always say, if you're a shoe size 11 and they don't have a 12, or they don't have an 11, they're either going to put you in a 12 or try to squeeze you in a 10. With brokers, you just have more financial products to be able to place and find out what that person wants, because you could have a mortgage, you might want a credit line afterwards, you might want to buy a cottage, you might want to buy an investment property, you might want to get all your kids are going off to college, you need some money for that. Like, and to stick to one bank, I just feel like it's crazy. And at the same time, I mean, me being a real estate lawyer, working in this industry, the stuff that you guys do, I still don't get a hang of, because there's just so many financial products out there that you need, like you need an expert on your side. A mortgage is no longer a mortgage anymore. And I think you know that more better than I do. But from the outside, there's just so many little things to it that it's better to build that relationship with somebody who knows, as opposed to trying to figure this out yourself.
And you're right. And I think what I love about it is that after our analysis and after we go through everything and explore the options that are available, we may end up choosing to put them with their financial institution that they deal with. But it's nice to know that that was the right choice, right? As opposed to if you're dealing with just the financial institution directly, that is all that they have to offer, and they haven't explored other options for the client necessarily, right?
Yeah.
They may come to the same end goal, at the end of the day, but it's nice to know that you have somebody that's being an advocate for the client to find the best solution, as opposed to being the advocate for the financial institution to build more business, right?
Yeah, no, 100%. So, but how did you go from, and you worked for a bulge bracket bank, so it's not something small. So you went from, a really nice, what I would say, a comfortable job, and then kind of jump into the entrepreneurial side. What kind of, like, were you intimidated at all? Was there just kind of a hesitation? What was the impetus of actually pushing you off? Because frankly speaking, when you're in a position like that and you're in a bank and you have a reputation, most people don't want to leave to be able to start their own thing, no matter how good they are at what they do.
For sure, you're not wrong at all. And it was a cliff dive. Honestly, it was probably one of the scariest things that I'd ever done, to be able to step out. And my whole lead source, so to say, my source of business came directly from the financial institution, and I was leaving all of that behind. So I really had to go out and hustle and be able to make connections and build relationships to be able to create referral opportunities. And I was very grateful and fortunate that many of my clients did still find me. Right? I was Googleable, I guess, searchable on Google. People still found me, and some still continue to reach out, which was lovely, and really helped boost my confidence in that regard. It was a lot to learn. There was so many more choices and so many things that I needed to quickly accelerate. And so, having since left, I've been a constant student of learning to be able to ensure that my skill set can meet the changing needs and environment that we're in. I mean, there's so many different new things that are happening in our industry. And so it's a lot about, the courses and regulations and different things to keep up with, to be able to stay current and relevant. And not only just be able to serve on a transaction, right? But also to upskill myself enough to be able to provide value-added advice that can actually make a financial difference for clients. So you alluded to in the beginning of the presentation here that I'm Smith Manoeuvre certified as a professional. And that is something that has been an incredible asset value to be able to provide to my clients, to teach them how to be able to create wealth through real estate for themselves, their family, and creating that generational wealth.
Yeah, no, and definitely, like nowadays, especially, you have so much with the financial world that you really need to have a good understanding of what's going on so that you can optimize that wealth, what you're saying, wealth creation, so that you're actually building wealth the entire time. And you're not just, you could buy a house. That's the other thing. You could buy a house, you could buy an investment property. That doesn't make it a smart decision. It's a good first step. But you really need to be surrounding yourself with the right people to make sure that you make the most of those decisions. And it's just not a set it and forget it, because when you set it and forget it, often enough, you set it and you lose it. So you have to be with the individuals that are there. And the other thing that I wanted to say actually was, What I find, and it's kind of exactly on point to what you just described, the constant learning. I find that, again, I'm not ragging on banks, but with banks, if you are good at what you do, as a consumer, if I go back to the bank, that agent is no longer going to be there. And if they're there after 3 years or 5 years of renewal, when I have to renew my mortgage, I don't know. I'm not going to say that they're not good, but I question it sometimes. But with mortgage brokers, it's the complete opposite. If you're not good, you're not going to be there in 5 years. If you are good and you know what you're doing and you're constantly on top of things, you're definitely going to be thriving in 5 years. So it's a complete opposite. And I like that, I guess, sense of incentivization of going back to build that relationship with a broker better than the bank. Does that make sense?
For sure, for sure. And that's one of the approaches that we take, right? Is being able to zoom out and say, let's look beyond just this transaction, this moment in particular time. There's a definite need here and we need to be able to service that. But I want to take a look at that whole picture and know that how we're setting you up today is also going to help you for your future goals as well, as opposed to impeding and getting in the way or slowing down that timeline for the future goals that you have too. So it's a really important perspective to take, other than just, your traditional McDonald's, do you want fries with that order?
Yeah, yep, no, 100%. So I want to change gears a little bit, and I want to go more into what it's like working with you. I know that personally, there's your team is very good at what they do. But if you could break it down, for my listeners, if you do want to reach out to Christina, her contact information is either going to be below or on the side, depending on where you're listening. It's always going to be in the description. So check her out, and definitely reach out to her if you have any questions. But could you give my listeners a little bit of kind of the trajectory or the experience, what it's like to work with you? Do they give you a call? Do they shoot you an email? How do they get in touch, and what's kind of the process?
Absolutely. Great. So you're right. I have a team, and I'm very fortunate to be surrounded by amazing people. So I have my business partner, Steph Edwards, who is also a mortgage agent. Her and I collaborate really well together with the same goals and values. And we belong to Vine Group, which is a mortgage brokerage, a boutique national brokerage that we are able to then do mortgages right across Canada. So both of those pieces are really pivotal in terms of our success and our process and how we do things. So when clients first reach out to us, we're going to have that quick conversation just in terms of, give me a brief highlight of what your goal is, and talk about the journey that we're going to go on. And so I invite clients to come along a journey with us, right? And it is different than what a standard mortgage professional, even in our industry, would necessarily put a client through. So when you go to get, say, a pre-approval, it oftentimes is about, let's gather a little bit of data, plug those details into a calculator and say, hey, this is what it's going to look like. But with Vine Group and with Steph and I under our In-Debt on Purpose team, we actually take it that step further. Is we want to do a full and complete pre-funding audit on our clients. So this is the caliber that the lenders are going to do in that final stage when you're in a live deal. We do that all up front. So that does require us to be able to gather all of your documents, your current financial snapshot. Tell us exactly kind of where you are. Let's do an audit on your credit. Let's do an audit on your income. And I invite people to be able to upload that through our secure portal so that we then can be able to do an analysis on that and then book a follow-up appointment with our clients and say, okay, now I understand your picture. And now let's talk about your goals and see how the two can blend seamlessly together to be able to create the best outcome, right? And that's where we have the option to then be able to pivot in different directions. But now I know what I'm working with. And I liken it to your experience if you were to go to your doctor, for example. You're not feeling well, something's wrong. You go into your doctor and say, doc, I need some help. I need you to tell me what's wrong. But you're not allowed to do any tests.
Yeah.
Do you want that kind of advice from your doctor? Right?
Yeah.
So the same with us. We get a lot of calls that people will ask, say, well, how much could I qualify? This is how much money I make. We can't do an effective job for our clients if we're making a decision based on that, right? We need to be able to truly see that picture, because it goes back to, we don't want to be an order taker, and we want to make sure that the advice that we're giving not only fits the current moment and need at this moment now, as well as what maybe their future goals are, because we want to have them well positioned for what they're looking to be able to do well beyond just the initial transaction, right?
Yeah, no, and what you said kind of resonates, the whole doctor analogy, because I feel like, and I see this from the periphery, and I feel bad for a lot of people within the industry when clients come in and the only question they have is, what's the cheapest rate? Well, and if you're, for example, if you take that doctor analogy, you're not going to be going in and telling them like, okay, well, what's the fastest way for me to stop coughing? Well, you got to figure out what's wrong. And is this a symptom? Is this a bigger issue? We do it, like you said, a couple of tests and figure out, well, maybe, you know what, the coughing isn't the biggest issue. We got to figure this other thing out and figure out what your overall health is. I think it's the same thing where rates don't matter. And I think people know this now, or they should know this now, more than they should have at any other point, especially with everybody kind of that had gone into the variable rates, not knowing, not that it was bad for everyone. I still don't think it's bad for everyone. No. I still don't think it's a bad decision, but the individuals who jumped into the lowest rate only because it was the lowest rate, not looking at everything else, is not the wisest decision. But it's the same thing with, you could have gotten into a fixed mortgage, and you look at like, well, I mean, yeah, sure, now you could say that the interest rates are lower, but if you need to move, your job moves, whatever, the prepayment penalties or whatever it is behind that become more expensive. So it's like, I do believe that if you're a professional, if you're looking for a professional like a broker, you really have to trust them. You have to kind of give them everything, and then you have to trust their advice, because that is why you're working with them. So my guess, do you have what would you say to those individuals who are still looking at what's the lowest rate when they come to you, or any broker?
Well, you said it. Yeah, you absolutely nailed it right on the head, is that rate isn't the only factor to be able to consider. And so let me just kind of give a scenario to so many different scenarios, but we'll start with one. You know, when they got that pre-approval that hadn't been the full analysis, and they're going to say, okay, just strictly based on income and debt, this is the amount that you would look at being able to be able to have qualified. But if somebody hasn't dived in and done all of that analysis, maybe their credit was horrible and they can't actually qualify for the rate that was quoted to them. And then you get in your head that, oh my gosh, but now I was expecting this one thing to be able to get this rate, and this was my budget. And now, unfortunately, circumstances dictate that now maybe it's an alternative lender with a slightly higher interest rate, or this is the only lender that will approve the type of funding that they need to be able to acquire on a purchase. And then they're very disappointed. And this is supposed to be an exciting time when we're dealing and transacting in real estate. It's not, you know, you don't want to ride the lows on that part of it. So setting the right expectations is critically important. But also when it comes to having that right advice, for example, when we're able to implement other strategies into their finances as well, like the Smith Manoeuvre or rental cash damming, rate becomes irrelevant when we can teach them how to be able to accelerate, pay down their mortgage faster, save more money with Revenue Canada because of tax deductibility strategies that we're able to help them employ within their mortgage facility. These make a difference and totally outweigh what the actual interest rate is on that mortgage.
So all of this information that you just said, because that's a lot there, cash damming and the Smith Maneuver, are these things that you would kind of go over in a call, or do you have webinars? Like, how do you kind of get that information out to anybody who's kind of working with you?
Yes, great question. Yes, we do hold webinars to help educate clients. We actually have a website that has many educational videos on the rental cash damming, on why a rental property is better than an RESP to help fund your child's education. There's so many different things that we can share with our listeners to be able to do the research. And of course, obviously, a one-on-one consultation to see if the situation is applicable to them, because it is about having the right structure in place. And it is not, it's not for everyone, but I think it's important that people know about it so that they can then position themselves in the future to be able to start take advantage of these types of strategies.
Yeah. And how early should people reach out to you? Because I know that right now, for example, there's a lot of people who they want to buy. The market is picking up, but at the same time, there's a lot of people on the sidelines thinking, well, are the interest rates going to go up, down, whatever it is? People are saying it's down. So they do want to buy, but they don't know when to reach out. Like, how early should they be reaching out to you? 6 months, a year? Well, how early? And what should they what's a good amount of homework they should have done or should do before reaching out to you? What should they know?
For sure. So I think that the earlier the better. And I would honestly say if you're, in that first time home buyer market, definitely 12 months ahead of schedule, right? And the idea or the reason behind that is that are there recommendations that we can make that give you the time to be able to implement to put yourself in a good position when you're ready to buy that first home, right? Prime example, helping out a client that they were looking to be able to purchase their first home. They were a student, they graduated, they're in a really good career, really good income, been furiously paying down their student loan at a very substantial amount each and every single month. As a result of that, they weren't saving, right? But they were going to receive a gifted down payment from a family member. Through that conversation, I said, well, if you're going to receive that money, why not take some of that and put it into a first home savings account and into an RSP account because they had the contribution room. So it was going to be $40,000 that they could put into these two programs, which next year, based on their tax bracket, was going to receive enough of a tax refund that was going to be able to pay off the remaining balance of their student loan.
Oh, wow.
So we got Revenue Canada to pay their debt.
Yeah.
Just from that simple strategy. Otherwise, they would have just taken the gifted down payment, gone into home ownership, and been without that extra money from the government, right?
I mean, this is the first time I'm hearing CRAs paying for anything. Usually just love to ask.
Right? Exactly. So on top of that, the budget analysis that we do as well, it's the breakdown of, what that affordability looks like. One of the key things is when folks want to take a look at the housing market and what they like in properties and stuff, they have this vision of the house in mind, but not the budget, right? And just because you can qualify for a certain amount, you're excited in that moment. And you're still not really looking at the numbers. So when we share a budget sheet and say, okay, so this is what that mortgage payment is going to look like. And only you are going to know if that really works with your financial situation, because there's a lot of expenses that we all have in life, daycare and, other expenses or lifestyles that we like to be able to maintain that don't come into play with the mortgage qualification amount. Yeah. And so when you truly see those numbers and what that's going to look like, I've had a lot of people self-elect to say, maybe I don't want to be house rich and cash poor. Maybe I need to adjust, the price range that I'm looking at in terms of what I want to be able to have as a monthly payment and still live comfortably in life, right? Yeah. But the second piece to that also would be beyond the down payment. So part of that budget process that we go through with the clients is this is the down payment you need to have, but here's also the amount that you need to have for closing costs. And does that math all work? Because we don't want you to have surprises on closing day or, coming a week in advance to Harris and say, you want me to bring in how much as a check? Right?
And you'd be surprised. There's a lot of people who just aren't prepared for that. And not even just that. I just love what you just said before, where you said you don't want to be house rich, cash poor. There's a lot of people who, I want to get into something this big. I'll stop drinking coffee outside. I'll stop eating outside. I'll stop eating in period. And then I'll be able to afford the mortgage. And that's not really something that's practical because you're not setting yourself up for long-term success. So that's why you need to have conversations with people like you who are like, you know what, keep your coffee. Let's kind of get you to graduate to the house. Your first home, it doesn't have to be your first home that you're going to buy is not going to be the last home you buy. So, and it's important to kind of understand that. Now, I just want to kind of move on to this piece that you're kind of talking about in terms of pre-approvals and all of that, because I see that pre-approvals, they're definitely not all made the same. This is another reason why I always say go to brokers like Christina, just because, like you just said, you do a deep dive. I don't think banks, I've never heard of a bank do a deep dive prior to an agreement of purchase and sale. So that is, you're kind of in the dark. You don't know how much you really can afford. And you know better than I do that a dollar of income is not a dollar of income. There's so many different things that go to it. If you're self-employed, it means one thing. If you're employed, it means another thing. How it's coming in, gift, inheritance, all this other stuff that I'm throwing out words. I don't even know how that affects your affordability. But
Love it.
so there's just so much to it. Can you give us some insight on pre-approvals? Because I feel like you see a lot of commercials online that say, hey, there's pre-qualification, there's pre-approval. You can go on a website, punch in a number. They say you can afford everything under the sun, and you're like, this is great. And then there's other people who are asking you for a lot of documents and then saying this is how much you can afford, and that number is not as big as the number that you see online. So what's the difference, and how do we navigate that?
Absolutely. Yes. Great question. And it seems to be, everybody has a different version, and, what is the right way to go. Right.
Yeah.
But honestly, if you're dealing with a mortgage professional, bank, or outside of the industry, it is really important to ensure that they are going through and auditing documents and pulling credit, because oftentimes it is literally, and you might have even filled in an application, and they've just run it through and it does the math, and it's the math only. They haven't truly audited the documents. They haven't maybe checked your actual credit bureau. And typically most pre-approvals out there, all they're doing is securing a rate for you for a 120-day period, right?
Mm-hmm.
When they get into a live offer, that's when they're getting into the actual audit, and does this really work? Which has shot a lot of people in the foot, in the sense that they've not then been able to follow through. And so, again, within our process, we are doing that full pre-funding audit to be able to ensure that we're truly analyzing all the data, and that you can be able to put in that offer confidently. Now, with any pre-funding audit and or pre-approval that's out there, the lender may love the individual, right?
Mm-hmm.
And say, hey, income, debt servicing, all the math works. We can lend you this amount of money. But the only thing they can't respond to ahead of time to be able to allow you to go in and do a firm approval, or a firm offer on a property, is that they don't know the property that you're going to buy. Mm. And that is the foundation, or the underlying security that supports the financing that they're going to provide you with. So do they like the property? Do they want to lend against the property? How much do they want to lend against the property based on where it is and the condition that it's in, et cetera, right? Is it going to appraise for the same value that you're willing to pay for that property, right? When the markets kind of went crazy, and I think we're probably heading towards a little bit of that direction again, there was so many multiple offers going in on properties, and people were overbidding on them. And that didn't necessarily represent the true value of that property. So, Harris, maybe I can kind of spin this back to you. How many of your clients did you have as an experience where they went in firm on a property and then they couldn't get the financing?
I mean, you know what? I think we had figured this topic out a few days ago, but I think yesterday morning, I had clients who went in firm, thought that they could get the money for a house. And then they found out, and I don't know where they got the numbers from. I think it was online. They did not visit a bank. They didn't even visit a broker. And they had put in an offer, and now they couldn't get money anywhere, and their deposit's on the line here. And so they're trying to figure out, and then they're getting into messy products. They're trying to look at private mortgages for 95% loan to value. And that is just a really, I mean, unless you have an exit plan, just jumping into it to close a deal, I don't know how I'm for it, but it's not a good place to be in, because you're looking at like, hey, I put $50,000 deposit down. I'm afraid of losing this. So then you're trying to get into whatever you can. But there's so many people, and this is just recently, there's so many people prior, 100%. They go in firm and then they find out, you know what, I was self-employed, and that the number is different if I was employed. My interest rate's going to be higher a little bit because again, you know this more than I do. Because I'm not showing as much on my NOA, and so my amount comes down, or it's not as high as I thought. There's so many different things that kind of go to it that I don't think people really understand. That going in firm is, I never recommend it, even if you think that it's a slam dunk, and even if you think that no matter what happens you're going to be able to get a mortgage. Pre-approvals never are firm. There's always disclaimers. Yeah. There's based on, and you know this better than I do, that again, it's based on all these other things, that if this holds up and all this holds up, which is, I don't know when that has actually come true, but because everybody's nuanced, everybody has a different kind of way they're earning money, different streams of income, and these pre-approvals are, I feel like they're geared to give you the most optimal solution, to give you the most, or show you the most amount of money. Would that be a safe thing to say? At least the online pre-approvals or qualifications?
Definitely. So there is a solution that, though, it's kind of a newer thing to be able to take a look in, because you're right. There are so many variables that can influence, that change the trajectory of that pre-approval, right? To be able to finalize it. And I don't want to terrify people. A lot of times it can work out. Absolutely. But you don't want to be one of those people that it didn't work out for. Right? Yeah. And when you're going into those multiple bid situations, there are now options that are out there, and they're limited. So if you truly want to be able to put in a financing free condition, I would highly recommend having a facility to be able to fully get underwritten in that way. So the pre-funding audit, awesome. At least we're doing that full analysis. But if we use a program called Fundable, and this is newer, it is only available to a select number of agents across Canada. Both my business partner, Steph Edwards, and I are certified with Fundable to be able to offer this to our clients. And what that does is, not only do we have the high level where Steph and I are doing that pre-funding audit for our clients, but we then also 24 to 48 hours before you go to put an offer in on a property, because you usually know within that time frame that I want to go and put an offer on this property, right? And particularly when we have the multi-bid situation, they hold offers until a certain date, so you have the time to be able to do all of this research, right? The Fundable program will actually take not only the whole audit that we've done up front for our clients, but then they'll actually take the property address, and they will do a full analysis on the property without requiring to have an on-site appraisal, but they'll take a look at the MLS listing. They'll do full-on appraisal, like desktop appraisals, and all the data and everything that they can be able to find, and give an absolute guarantee of funding for that property. So if they like the property, they'll tell you, here's the price you can go up to with that offer, with the guarantee backup from a private lender of financing. Now, the whole idea about this, because we talked just about the private lending, and there is a space and a place for them.
Yep.
This is your worst case scenario of financing.
Yeah.
The lender actually doesn't want to fund, but they want to provide you the guarantee of funding. Okay. So if you get then that accepted offer because you've gone in and said, hey, I am actually 100% firm approved for this property purchase, as opposed to I'm just going in with a conditions free offer, right? As a seller of a home, that's kind of terrifying, accepting an offer that is conditions free, because you don't really know if it's going to close. But with a fundable one, there's 100% backup guarantee that this is going to approve. Now, the intent behind is that it helps you to win an offer, right? And then it's like a little mini insurance policy. You pay a small premium to be able to have this guarantee, to be able to give you that competitive edge in the offer. And then they will put the money aside for that financing for a 2-week period. They'll hold it. And that allows us to then take the financing to their traditional lender option that we're looking at that provides better rates and everything like that to secure the approval. Because that lender wants to do their appraisal and go through their audits and everything like that. It buys that time. And then if for whatever reason, maybe the lender didn't like the property or something fell through for whatever reason, you have the backup guarantee of that private lender financing. And you had the full contract information, rate, fees, everything all up front. So you knew what the worst case scenario was. And if the traditional lender financing comes through, awesome. We just cancel that fundable guarantee that we had because we no longer need it. Right?
So how much is Fundable? Sorry, how much is Fundable like guarantee up to? Is it 80%, 95%, 100%? Like what's the value?
Yeah. Great question. Yes, it's 80% financing because it is private lending option that we are looking at. So you want to have that buffer in there. So it's a 20% down payment scenario that you would be looking at. And it's broken down into two fees. So the first one would be $249. And that is to have up to 3 properties assessed under the Fundable. So if you went in, you put an offer in on one property and you didn't win that offer, you have up to 2 other additional properties that you could submit through the same process, right? For that $249 fee. If you are successful in securing that offer, then you would pay a small fee that would be related to that purchase based on the mortgage size that is being guaranteed. Okay, so honestly, it's be fairly small. It's 5 basis points on the mortgage amount. So it's not a significant amount. To hold it for that 2-week period to ensure that you have your traditional lender financing firmly approved and good to go, right? And then you don't need it anymore, so we just cancel it. But if you did need it, then at least you would know that you have the backup of that financing that's available.
So essentially you're buying an option and you can execute that option if need be, which is pretty awesome because again, to what I was kind of talking about earlier, that client couldn't even get private financing. They had to kind of walk away and potentially get sued. So that's a whole different story you don't want to be in. But so then can you walk me through like the process? Because let's say I've got a house that I saw last weekend. And they're saying they're putting in offers this Saturday. When should I get in touch with you, or how late can I? Because I'm still maybe deciding what's the kind of I guess process and what's the latest. Now I don't want to say how early because you could go as early as you want, but what's the latest you could go in if I'm trying to put in an offer Saturday at 10 a.m. When can I come to you the latest to kind of underwrite this entire deal?
Exactly. Well, hopefully we've already talked because we want to get that pre-funding done. And so that pre-funding, if you recall, requires full documents up front. So if, typically the company's been fairly good in being able to do up to 24 hours ahead of you putting an offer in on a property. But that is assuming that we have all documents to be able to have that full pre-funding audit decision. So if you're coming 24 hours ahead of time, let's hope we would have to have, not hope to have, we have to have all of the income, down payment verification, everything in play in order to be able to make a fully informed decision with that guarantee. Because without it, we can't guarantee it because we don't have all the facts.
Yeah. So really your homework starts like now, or not now, as in whenever you're ready to go out and look, and then right, like 24 hours before you go in, you're just they're giving you an address, and then you're kind of looking at the address and you're saying, we've already got your income. We're just now, because it's true. People don't realize that you get approved twice. You get approved and the property gets approved. I don't think people understand that. Like, even if you go into the most in-depth approvals, and you can, you do qualify for whatever it is, the bank might just say that this property, again, to what you're saying, is not valued at what you think it's valued at. Sometimes in certain condos, banks don't want to give mortgages because of the piping or whatever it is. So there's a lot of other things that are involved that you really do need to get in touch and figure out what your options are before you do. Because I've seen a lot of people who've gone in firm and then realized that they couldn't and they walked away from to deposit just because they couldn't get the money one way or the other. But this is pretty like amazing because this product I have never heard of before. Definitely, it's not something that's openly discussed on the market. Is there any kind of disclaimer in terms of the type of clients that you would pre-approve for something like this, or does anybody qualify? It doesn't matter what kind of income you have, what kind of house you're buying. I understand that the pre-approval is based on the circumstances, but there isn't like a minimum income or minimum net worth that you would bring in for this fundable deal.
No, the two pieces is one that we have the pre-funding audit to actually income qualify them for the financing for what they want to be able to put the offer in. And the second piece is having the 20% down payment. That's the criteria that is required in order to be able to secure be able to present the fundable guarantee offer. And they'll get a certificate that they're able to use in the presentation offer to be able to help secure that deal as well.
Oh wow! No, you know what? Anybody who, to what you're saying, any seller who comes to me and says, "Listen, I've got a firm offer, but no financing condition," I always say that's not always a good thing. Just because you don't want, sure, you could try to sue somebody, but do you really want to get into that mess, chase them around, and then try to sell your house again, or do you want to sell it right the first time? So, and this is definitely something that will assist in that.
I think it'll help boost seller confidence as well when accepting offers, right? Giving them that peace of mind of knowing that they can actually close, because it's a snowball situation, right? You're selling a property with the expectation that the person who's agreed to purchase it is going to be able to close, and you've then made a decision to buy another property with the intent that these funds are coming, right? And so it kind of just snowballs down of how many people it impacts when things go wrong, right? So to have that peace of mind of knowing that it's guaranteed brings a lot of peace.
Yep. No, I couldn't agree more. Thank you for coming on our podcast. There's a lot of information there, and I hope my listeners are listening carefully. If they ever want to reach out to Christina, I have her contact information again, either below or on the side, depending on where you're listening. It's always going to be in the comments. Thank you for coming on the podcast again, Christina. Any last words?
I wanted to say thank you so much for having me on here. I really appreciate it. Harris, you and your team do such a fantastic job for our clients as well. So we really appreciate the partnership and the collaboration. So thank you.
No, pleasure's all mine. And likewise, I always appreciate working with your team. Thank you.
Thank you. You're welcome. Have a great day.
You too.